Finolex Cable's stock price experienced a significant surge, climbing by 12.21% to close at 1,283.75 INR. This increase added 139.70 INR to the stock price in a single day, marking a notable breakout from a technical analysis perspective. A breakout occurs when the stock price surpasses a previous resistance level, which in this case was around 1,230 Indian rupees, indicating strong demand. The breakout was accompanied by a significant rise in trading volume, suggesting heightened investor interest and confidence in the stock. Higher volume during a breakout is a positive indicator, as it shows widespread participation among traders and investors, lending credibility to the upward movement. The primary catalyst for this surge was the company's exceptional Q4 FY24 financial results. Finolex Cables reported an 18.3% increase in revenue to 1,450.69 crore INR, a 6.3% rise in net profit to 186.1 crore INR, and an 11.2% growth in EBITDA to 162 crore INR. The announcement of a dividend further boosted investor confidence. Historically, Finolex Cables has demonstrated robust growth, with sales growing at a compounded annual growth rate (CAGR) of 22% and profits at a CAGR of 26% over the last 3 years. This historical performance underpins the stock's recent success and the positive market reaction to the Q4 results. Currently, Finolex Cables has a market capitalization of 19,616 crore INR and a price-to-earnings (PE) ratio of 34.3. While this PE ratio is lower compared to industry leaders like Polycab and KI, it reflects some inconsistency in profit. However, the recent financial performance and market response indicate potential for sustained growth, making Finolex Cables a stock to watch closely. Today, Bharat Defence's stock soared by over 10%, closing at 859.40 INR. This remarkable rise caught the attention of many investors, indicating strong buying interest and a significant shift in market sentiment. Such a substantial increase in a single day is often a result of multiple converging factors that we'll explore next. From a technical perspective, the stock has broken out of a key resistance level at around 850 Indian rupees, accompanied by a significant increase in volume. This breakout suggests strong bullish sentiment among traders. When a stock breaks through resistance with high volume, it often indicates that buyers are confident and willing to pay higher prices. The previous resistance level, now surpassed, could act as a new support level in future trading sessions. If the stock holds above this level, it could signal a continuation of the uptrend. This means that if the price dips back to this level, it is likely to find buyers again, supporting the price and potentially leading to further gains. One possible reason for this price jump is the anticipation of the company's quarterly results, scheduled to be announced on 25th May. There's speculation that insiders might have positive information about these results, driving the stock higher. Investors often buy shares ahead of earnings reports in expectation of good news, which can lead to price increases. Historically, Bharat Defence's growth rates have been moderate. Compounded sales growth over the past 5 years is 8% and profit growth is 22% over the last 3 years. However, the trailing 12 months (TTM) show a dip in profit growth by 13%. This indicates that while the company has shown some growth, it has also faced challenges, particularly in the recent past. Despite the moderate growth rates, the current rally seems to be driven by positive market sentiment and speculation rather than fundamental performance. Company will have to provide sustainable growth to justify the valuations. Now, let us dive into the explosive movement of Bharat Dynamics Ltd's stock, which saw a remarkable jump of over 10% in a single day. First, let's discuss today's big jump. Bharat Dynamics shares surged by 10.44%, reaching a new high of 1,552 rupees and 5 paise. From a technical perspective, this spike has brought the stock into a new trading range. The levels to watch out for include the recent high at around 1,650 rupees, which acts as the immediate resistance. On the downside, key support levels are around 1,400 rupees and 1,200 rupees. Traders should keep an eye on these levels to make informed buy or sell decisions. The primary catalyst behind this surge is the recent stock split. Bharat Dynamics announced a 1-to stock split, reducing the face value from 10 rupees to 5 rupees per share. This move was well received by the market, pushing the stock price to new highs. However, it's important to note that such jumps are often driven by market sentiment rather than fundamentals. We have seen similar scenarios with companies like Nestle, where the stock price initially surged post-split but eventually settled down. Looking at Bharat Dynamics' historical growth, the picture isn't entirely rosy. The company's growth rate has been inconsistent, with fluctuating profit margins and varying operating profit figures. This raises questions about the sustainability of its recent price jump. Currently, Bharat Dynamics boasts a high market capitalization, but its price-to-earnings ratio is on the higher side. The company is set to announce its quarterly results and FY24 dividends on 30th May. To justify the current valuations, Bharat Dynamics will need to deliver exceptional results. Today, Cochin Shipyard Limited has seen a significant jump in its share price, closing at 1,905.75 INR, up by 0.82%. The stock showed strong performance throughout the day, maintaining a position above 1,900 Indian rupees. This surge reflects a positive sentiment among investors. Let's dive into the technical aspects. As seen in the technical chart, Cochin Shipyard has been on an uptrend since November 2023. The stock has been respecting a rising trend line, indicating a consistent upward movement. This trend line acts as a dynamic support level, providing confidence to traders and investors that the price is likely to continue its upward trajectory as long as it stays above this line. Key resistance levels were broken at 1,500 Indian rupees and 1,750 Indian rupees, which were significant psychological barriers for the stock. The breakout above these levels was accompanied by higher trading volumes, indicating strong buying interest. Today, the stock tested the 1,900 Indian rupees mark, which is a crucial level to watch. If it sustains above this level, it could pave the way for further upside potential. The next resistance level to watch would be around 2,000 Indian rupees, while the immediate support level is at the previous resistance of 1,750 Indian rupees. The primary reason behind today's jump is the anticipation of strong Q4 results. Analysts and investors are expecting positive earnings, which has fueled the stock's recent rally. Interestingly, despite the recent surge, Cochin Shipyard's historical growth rate has been relatively poor. Over the past 10 years, sales have grown by just 3%, while profit growth is a mere 1%. Currently, Cochin Shipyard has a market cap of 50,315 crore INR and a pay ratio of 91.9, indicating that the stock is trading at a high valuation. In summary, Cochin Shipyard's share price surge today is a result of technical bullish trends and positive anticipation for the Q4 results, despite the company's historically modest growth rates.